Hello guys, are you there?
Yes, sir.
All right.
Yes, I might be having some problem with my internet, so my audio might not be so good sometimes.
Okay, I understand. Okay, welcome everyone to this week's webinar. Like I posted today, we just want to take a bit of time today to analyze some few currency pairs or gold and all that. And it was Paul that sent in his own what he wanted us to look at today. And he talked about Euro USD, GBP USD, and gold. So we are going to look at two of the instruments. We are going to look at GBP USD and gold. Okay. Okay, but can everyone see my screen?
Yes, sir.
Okay. Here on the daily time frame, look at what is happening here. This is a low. Why? Because it took out inducement. So this is the inducement that price will take out to confirm that low. And as you can see, that happened there. And then eventually it took out this high, which is our lower high before this lower low. It took out that. All right. So therefore, we have a new high here. For this high to be confirmed, inducement is needed. And as you can see, it took out that inducement to confirm that high. And our low is still here. All right. High and low here. All right. That's our trading range. So price took out that low with candle closure and printed a new low. So price took it out with this candle wick. And now this low took out inducement here to confirm a new high here. This is our high. No, that's not a high because inducement was not taken. The inducement to confirm this low is here. It's here. It's actually here. So this is not a high. Do we understand what we are doing at all? Are we there?
Yes, we are seeing.
On the daily time frame, price took out this low here. On the daily time frame, we were bullish. Look at it. So this is our high. That's our high. And our low is still here, like I told you. This is our low there. All right? And so why is that a high and why is this a low? This is a low because it took out inducement initially. Let me go back so that you can understand. Where is the inducement to confirm this low? Everyone. Are we together? Is that actually the inducement? Is that actually the inducement? Look at it carefully. See, price closed here. This previous candle, this one, it closed here and opened here. So when it opened, what happened? All right, price traveled back up and then came back down. All right, remember, this is an inside bar. This candle is an inside bar, isn't it? This is the actual low. All right, so now if price closed here and open here, it travel first down. This is what you have in the market here. This is what you have in the market. Price coming from this high. This is one straight leg. And then price started going up from there. That's what you have. This is what you have in the market. Will you call this, sorry, will you call this a pullback? This one, is it a pullback?
No, it's not.
It's not a
The other ones
pullback.
are-
This candle, this black candle opens above and closed below. All black candle open above, close below. And when it closed below, it first came down before going up to this high and then retraced to close here. Is that right? Or do you have any other opinion?
Oh, no, because the other one is an inside bar, so there is no valid pullback there.
There's no valid pullback.
Yeah.
This is what you have there. This is the structure you have. Okay? This is the structure you have. So your actual pullback is here. This one is your pullback.
Yeah.
And price took it out. Okay? Price took out that pullback. And after that pullback here, after this pullback, okay, you now have this high. This high. Why is that a valid high? This is a low. So this low was broken here by this high. And therefore, when price took out this inducement and went ahead to take out this major structure high here, what do you call that?
Sure.
Alan, are you there? Hello, Alan. Are you there? Okay, Alan, if you are having problems with the audio, you can send in a message. You can just type in something, let me know whether you agree with me or not. Okay, so that's a chalk, and this is your low, and this is your high. So this is your trading range. And so price came, took out this major structure low here, and that is chalk. It took it out and closed. Did it close below it? No, it didn't. Initially, it didn't close below, sorry. Initially, it didn't close below. But eventually, it closed below to confirm this as a valid chalk. All right? And therefore, if you are for this low to be confirmed, you need inducement. Okay, so this is your inducement. This is not a high because there's no inducement on that leg. There's no inducement on this leg to confirm this low. The only inducement you have here is this. This is the first pullback. This one is not a pullback because this candle, high and low, protected. All right? So this is our inducement here to confirm this low. After this inducement, if you want to mark this as your area of interest, your order flow is already mitigated, all right, by this pullback here. There is a pullback here, as you can see. It's already mitigated. So we can use that. Now, if you want to also mark this order flow is also mitigated. Okay? So if you want to mark this, so this pullback, this order flow is also mitigated. Now, this one is also mitigated. This order flow is also mitigated. But take a look at this one. This one. Is it mitigated? No. And so that one is not mitigated. Let me zoom in for you to see. Can you see? All right. From here, go back. It's not mitigated. Okay? So we have proper imbalance, as you can see, and eventually price tap into that one. Okay? But after that pullback, that's our decisional OB. Where is the extreme OB? Everything here is mitigated. All right. Now, remember the extreme OB anywhere around here this is trend line liquidity. Okay. This is trend line. Price will take out this trend line liquidity. Okay. So the only area of interest we have here on the daily time frame of GU is this area of interest that price has tapped into. Now, because price has tapped into this area of interest, if you had gone to the lower time frame, like the 1H, that's where you would have gotten your trade from. So if price now comes back to take out this area of interest, which is the only valid area of interest that we have here, that means that price is going to take out this high. Until price takes it out. Why will we not take any trade from here? Because of this trend line liquidity here. So that is the picture on the daily time frame of GU. Now, if we go to the 1H, let's just move to the 1H and see what is happening there. So this is that our daily time frame area of interest. So you can refine it anyhow you want. But remember, price came into this our daily time frame area of interest and reacted. How will we have taken advantage of this trade now? How will we have taken this trade inside this daily time frame area of interest? Now, price has come into this. This is the highest high now. From this low here, let me start from here so it can be clearer to you. I said the first time price tapped into this daily time frame area of interest is here, isn't it?
Yes, sir.
And for you to take this trade when price taps into higher time frame area of interest, if you want to use chalk entry approach, now where is your chalk? Your chalk is the first low in the case of this bullish structure coming in here. So this is your chalk, and after chalk, because price now closed here, look at it, this pullback here. It took it out with a candle wick, but eventually this candle closed above. All right. So candle has closed above this high. So in that case, after you mark your chalk here, you need to wait for your inducement. Once price takes out this chalk, for instance, if you mark this chalk here like this, all right, and this price didn't go up but came down from here like this to come and take out this chalk here, all right, if price didn't go higher, if from here now price came down to take out this chalk here, after taking out this chalk here, you need inducement. Why? Because candle close above this high, this pullback here, candle close above it. So you need inducement. So you wait for inducement to be taken. After inducement has been taken, there are two ways it can be taken. Either it took it out with a candle wick and gives you TNCP, then you go short, all right, from there. Or it closes above this inducement and taps into this area of interest here, and you go short. All right?
Okay. Yes, sir.
Do you understand what we are saying? What's
yes, sir.
To this?
It's now clear.
What, are you there?
Yes, I'm here.
Okay. Are you following us?
Oh yeah, I'm following.
Okay.
I had some computer issues, but so I got on my phone, but I'm trying to fix my computer now so I can see it on the big screen. But
okay.
I can see it. I'm good.
Okay. Alan, your audio is bad. Have you fixed it now?
Yeah, can you hear me?
Yes, I can hear you loud and clear.
Okay, good.
So that is about there. If price had come down from this point to come and take out this chalk, but it didn't happen. Okay, it created a new high here. This high didn't take out any chalk. So eventually price got to this point here, to this high, here. Okay? So when price printed this high, it needs chalk. And where is your chalk here? Here would have been the chalk. But as you can see, price didn't come down to take out that chalk. Instead, price went higher. After pulling back, it went higher to take out this previous structure high here with a candle wick. Can you see it?
Yes, sir.
Can everyone see it clearly? It took it out with a candle wick. All right?
Yes.
So this is the highest high now. Now, since you have a high there, you need a chalk before you can enter your trade. And this is the chalk here. So price took out that change of character. It took out this low. That becomes your change of character. All right? Now, in this case, you don't need inducement anymore. Why? Because price took out this structure high here, this previous high here. It took it out with a candle wick. So the smart money has already taken liquidity here. Once liquidity has been taken here, you don't need any other inducement. Inducement is a form of liquidity. Okay? So you don't need inducement because it has taken out liquidity here by wicking above this previous high. All right? So in that case, you want to enter your trade directly without any inducement. And where is your OB now? Your OB is this candle that swept this structure high here. All right? So this becomes your OB, this one. Okay? So you would have marked that OB and take your trade from there. So this would have been your trade setup. Simple and straightforward. This would have been your trade. As you can see, price came into it. Let's frame that trade now. So this would have been your trade. You can give a buffer. And then you target some form of low. Remember, when you are trading like this, price can do anything. So you begin to look at the lows, your swing, whether swing lows or internal structures lows. Then you can take, for instance, here, look at this point. Okay, even here, look at this one. This is not a valid, it's not a valid low. It's this one. The first one is this one. So your first area would have been here. Once price takes out this low and closes below this low, you can move your stop loss to break even in order for you to be in a risk-free trade. All right? Do we all understand that?
Yes,
Yeah.
sir.
So-
I have one quick question. One quick question
Okay.
about that order block.
Okay.
That order block that you marked, right?
Yes.
See, I would have probably looked at that as it already has been mitigated, or has it not?
Okay. Now, let me say something now. You know, initially, all right, when price took out this high, all these candles were not printed. Remember that? They were not
Okay.
printed. It was only this candle that took out the high of this candle, isn't it?
Yes.
All of this were not there. So what you will do is to mark this candle that took out this high. All right? Now, if you want further confirmation, then you can wait for a candle to close below this very candle that took out that liquidity there. All right? And in that case, you would have transferred your OB from this one to the next candle. Is that clear?
Oh, yes. That's what I
Remember,
would've
this
done.
will not have happened. This candle will not have been printed at that time. So you would
Right.
have had your fair value gap there. And therefore, anytime price comes to tap into this, your OB, then you would have gone short from there. This one is just because all these candles are printed here.
Okay.
But in real time, you know, these candles will not have been printed yet. Do you understand that?
Oh yeah, I get it now. I'm
Okay.
looking, I see.
So to manage your trade, immediately it closes below this low, move your stop loss to break even. And the next low you would have targeted is this low here. Is this low. So once price takes out this low, then you can move your stop loss either to this point to lock up your profit, or move it to somewhere here, lock up your profit. Because price can do anything. It can simply turn back and start going higher. No one knows what the market can do. No one can predict the market. We are trading probabilities. So that's how you trail your stops. You trail it until you get to this ultimate target. Here will be this your low here. Remember, where is our low? But you know what I mean? Did
Yes,
you get
sir.
what I mean? So if we go back to that daily time frame, if we go back to this daily time frame, where this daily time frame here, okay, so price came down. All right, you would have used this to trail your stops. First would have been here, move your stop loss to break even. Next one will be here, okay, and you continue to trail it like that. But as you can see, price came here and is trying to go back. Why is this? Why is price doing this now? Why is it doing this? Now let's see why it's doing it on this daily time frame. Look at why price is doing this. So price printed this high. Why? It took out chalk here on the lower time frame, but on the daily time frame, it took out this inducement. So when it took out this inducement, this high is confirmed. Okay? And price now came down and printed. Remember, as price was going up, all these are internal structures. Okay? The last internal structure was this high, took out inducement, printed this low. So this is your low here, and this is your high here. Internal structure I'm talking about. And so when price took out this inducement, and then later came down to take out this one, this will become internal structure change of character. All right? To downtrend, to bearish structure. All right? And then you have this low here. For this low to be confirmed, inducement is needed. And here is your inducement in the market, this one. That's your inducement. So you have a high, internal structure high, internal structure low. Remember, this is internal structures now. Internal structure high, internal structure low. Inducement has been taken. So where is your area of interest? Within the internal structures. I'm trying to tell you why price is moving like this. That is if this is going to hold properly. Now it took out inducement. Where is your order flow? Everyone mark your order flow here. I can only see Walter. How about the rest? Paul, are you there?
Yes, so that it is not clear to me. I can't see it. It is very faint.
Okay, so inducement was taken out, and let's see the order flow here. Well, if you say this is an order flow, all right, somehow this is your small order flow here, okay, and that's your decisional. Price came into that and dropped, but failed later. But do you know this small drop here is huge move on your lower time frame because this is daily time frame. This small drop here is huge move on the daily time frame. All right, but eventually it failed. But you could have gone to your daily time frame to have huge profit, make huge good setup here. All right. Now, after that decisional area of interest, where is your extreme area of interest? Where is extreme? Everyone. This is your extreme. Let me show that to you because some of you are marking here. All right. Now, take a look at this. Take a look at this. This candle's high took out this previous candle's high. Let's look at it. If you mark this as your area, as your order flow, it's already mitigated. Look at it. There is a pullback there that mitigated it. Can you see that? It's mitigated. So we can't use that. All right? We can't use that. But take a look at this candle. Yeah. That's it. Watermark there. Look at this. This candle's high took out this previous candle's high. So this black candle has a higher high. All right? And price now came down. All right? And created, look at this. Price took out this previous candle's high. Can you see it? And drop. So this becomes, this actually is an area of interest that you can look at. All right? Here. It's your area of interest with good imbalance. All right? So if in future price comes into this, in future price comes into this, then we can go short from there. That is, if this zone is to hold this price. That is why this movement is happening here. This is your extreme area of interest on the internal structure. This is your decisional on this internal structure. That's why this movement is happening. Let's continue to look at the movement. So now price printed this low, and now price eventually took out this structure here, this zone here, and created a new high. But inducement is needed. It didn't take out that inducement. Created a new high. Inducement is needed. It didn't take it out. This one, a high. Inducement was not taken out. How about this? Inducement was not taken. How about this? Now, inducement was taken out. All right? Here is your inducement. On the internal structures for this high to be confirmed, this is your inducement. Taken out. All right? To confirm this high. This one. So this is a high. And after taking out that high, price came into where? An area of interest somewhere here. Let me see. After taking out inducement, all right, price rotated back down to take out, but this OB, this one is already mitigated by this. We would have had opportunity, would have been to use this wick after taking out this candle. This one took it out. So we use this wick as a hidden OB to take trade here. All right? To go higher. And when price went higher, it took out this internal structure high here. Now remember, this is a low now, because let's see whether price close above. Where you don't understand, please ask me questions. So, as you can see, price close above this high, internal structure high, price close above. So this low is confirmed. That's why you are seeing this movement. Okay? So now we have a new high. For this high to be confirmed, it needs inducement. This is your inducement in the market. All right? Now, after that inducement, price came and took out this major internal structure low here. It took it out. What do you call that? That's chalk. And close below it, that's chalk. Remember, when inducement was taken, this high is confirmed here. This high is confirmed when it took out this inducement and came further to take out this chalk here. So we are now bearish. So printed this low. For this low to be confirmed, it needs inducement. Okay?
Around there. Yes, sir.
This should be your inducement. Okay? So this low is now confirmed. Please remember, all these are internal structures. I'm just telling you why this movement happened. These are internal structures. So now inducement has been taken. This is your high, internal structure high, internal structure low. So after inducement has been taken, where is your area of interest? Okay? The first area of interest we would have gotten would have been this order flow here. All right? In the market. That's your order flow. Okay? And price came to tap into it. So it took out this inducement to confirm this internal structure low, and this is our decisional area of interest. Price tapped into it, gave a little reaction, and then failed because this is decisional. Now, where is our extreme area of interest here? Everyone, mark your extreme area of interest. Is that actually your extreme area of interest? Do we have any valid area of interest there?
No, I don't seem to see any.
Take a look at this.
Yeah.
This
Looks
order
like it's
flow is already mitigated.
Right. Looks
This
like
one is already mitigated, isn't it?
Mhm.
It's already
Yeah.
mitigated by this pullback. Okay? Now, this one, this high, did it take out this previous candle's high?
No.
I don't think so. So this cannot be.
Yeah. Excuse me, sir.
Yes.
Even there, if you are back testing, you can also not sit there in that order flow.
This order flow is already
It was
mitigated
by the foreign candle, but then it came back.
Yes.
With a valid pullback.
A valid pullback to mitigate it. Okay? All these ones.
They had already been mitigated.
Yeah, all these ones were not valid pullback. The real pullback happened here and came back to tap into it.
You may have a point, yeah.
So, but I don't want to confuse you guys. Just continue with the way you were trading. All right? Just continue with the way you are trading and until I finish the back testing session. But for now, let's just continue. So, this order flow is already mitigated by this pullback here. Now, there is no order flow here. Neither is there any OB here. All right? So, in that case, what do? There is only one solution left. If price now comes to take out this high, this major internal structure high, with a candle wick, all right, and gives us TNCP, then we can go short from there. Because everything here is mitigated. But if it closes above, then we wait for it to tap into this area of interest. Simple. Now, remember this is on the daily time frame. So if we now go to the 1H within these internal structures here, this is the 1H inside of this internal structure. Okay? So this is that structure high. And now price printed this high. Let's see the internal structures on the 1H now. For this high, it needs inducement. And where is the inducement? Everyone, where is your inducement? Where is your inducement? Okay, look at it. Because we need to be very, very, very careful. You know, sometimes this smart money, they are very wise. Look at what happened here.
Oh, I see. Okay.
Okay,
Now that you-
can you see it? You have
Yep,
you have this high, pull back. You have this high, pull back. Can you see that? Before.
yeah, I can.
So that's your
When you zoom
inducement. So it has taken out that inducement. These ones were not valid pullback. The real pullback happened here and came back to tap into
you may
it.
have a point, yeah.
So, but I don't want to confuse you guys. Just continue with the way you were trading. All right? Just continue with the way you are trading and until I finish the back testing session. But for now, let's just continue. So this other flow is already mitigated by this pullback here. Now, there is no other flow here. Neither is there any OB here. All right? So in that case, what do? There is only one solution left. If price now comes to take out this high, this major internal structure high with a candle wick, all right, and gives us TNCP, then we can go short from there. Because everything here is mitigated. But if it closes above, then we wait for it to tap into this area of interest. Simple. Now, remember this is on the daily time frame. So if we now go to the 1H within these internal structures here, this is the 1H inside of this internal structure. Okay? So this is that structure high. And now price printed this high. Let's see the internal structures on the 1H now. For this high, it needs inducement. And where is the inducement? Everyone, where is your inducement? Where is your inducement? Okay, look at it. Because we need to be very, very, very careful. You know, sometimes this smart money, they are very wise. Look at what happened here.
Oh, I see. Okay.
Okay,
Now that you-
can you see it? You have
Yep,
you have this high, pull back.